Leaders must begin to rethink old business norms and start building superfluid organizations as they separate signal from noise. In a fast evolving landscape driven by technology, many are starting with pilots in agentic artificial intelligence, smart contracts, and digital twins, and learning quickly from pilot failures. Existing structures may stay for now, but as roles, capabilities, and models evolve, silos and hierarchies give way to flatter models. Leaders must preserve trust of stakeholders, perhaps the most important intangible asset. Hello, and welcome to Global Business Insights, where we bring perspectives to help navigate an increasingly complex terrain. Today, we review Ernst& Young's Megatrends 2026 report, a comprehensive analysis looking at how the future of business is being shaped in real time. As 2026 unfolds, there is value in pausing not just to react to change, but to understand it. As EY Global Vice Chair Han Jessica Bax puts it, leaders who thrive will be those who invest in human capability, build trust deliberately, and design organizations where adaptability is not just a goal, but a core operating principle. We may be at an inflection point, she says, where today's decisions on leadership, technology, and people will compound over the next decade. Let's start with the environment leaders are operating in. Back in 2021, only 1% of global executives said geopolitical risk consistently surprised them. By 2025, that number jumped to 35%. Today, perhaps over 80% of leaders feel overwhelmed by geopolitical uncertainty. At the same time, more than ever, leaders are energized by the possibilities created by emerging technologies. So what's changed? Change itself. It's no longer linear. Change now arrives in bursts and sudden tipping points. The past is no longer a reliable guide. Artificial intelligence is accelerating this reality, breaking adoption records and scaling faster than anything seen before. At the same time, the world is more volatile. Younger generations are reshaping consumer behavior, while social media and supply chain innovation are driving waves of micro trends that can fade within weeks rather than years. Interconnectedness is also deepening. Conflict in one region can quickly fuel inflation elsewhere, while trade policy changes can simultaneously disrupt supply chains with direct capital, reshape energy investment, and alter migration patterns. How do leaders navigate a world that no longer behaves predictably and change is non-linear? EY identifies some mega trends shaping the future. Today, I look at six of them from this recent report. First, the rise of the superfluid enterprise. Second is this era of the human-machine hybrid. Third is a global productivity reset. Fourth is about demographic and migration shifts. And then fifth is the global resource rush. And finally, there is a rethinking of capitalism itself. So let's break these down. First, the superfluid enterprise. Traditionally, organizations are slowed by friction from layers of hierarchy, delayed decisions, and disconnected systems. But what happens when that friction disappears? Emerging technologies, agentic AI, blockchain-based smart contracts, digital twins are making this possible. Old approval processes and checkpoints are becoming redundant. Internal controls are more inbuilt into workflows. The result is a new kind of organization which is flatter, faster, and more adaptive, and where decisions flow seamlessly and creativity accelerates. The second trend of human-machine collaboration at scale today is at its earliest phase. So imagine what a few years could look like. The global market for human augmentation technologies could reach $1.39 trillion by 2034. The main question is now how to avoid being edged out by organizations able to amplify human potential, thus changing the competitive game as a 73% productivity increase becomes not just possible, but within reach. Imagine the impact of tens of billions of artificial entities joining the workforce, operating 24 by 7 at lower cost and near limitless scale. Note that technologies reshaping human capability also affect how human talent must be led. Leaders have to be comfortable with making strategic decisions alongside artificial intelligence systems that outperform human analysis. Leaders now manage more diverse teams with widely varying capabilities and understand that societal and regulatory implications of enhancing human output will also need to be managed. EY concludes that the leadership playbook is being rewritten in real time. Companies are already piloting AI collaboration and physical augmentation tools with clear metrics tracking productivity, innovation, competitive advantage, employee well-being, and adoption barriers, learning also from these pilots. On productivity, traditional financial and non-financial measures seek to maximize returns at lowest cost or ratio of output to input. Most of these measures will no more apply. Already, familiar quarterly metrics are increasingly seen as not always helpful in gauging corporate health. The future is more about a subtle shift to capacity to convert information, insight, and innovation into sustained economic value. The challenge becomes how to observe and quantify gains that occur not on production lines but in digital ecosystems, in decision speed, system adaptability, and tracking the creativity unlocked through human-machine collaboration. For illustration, your P&L may be showing huge losses because of expenses related to strategic investments, and your cash may even be short, but there is a momentum of creativity that has already set you far ahead of the pack that is not seen in the numbers. Gains may still be lost in financial statements that have no way of showing progress in speed, quality, resilience, and potential or possibility of new revenue streams. Looking at people in the old world, organizations competed in an outdated model for talent as though it was scarce and fixed. So what has changed? Capabilities today expire faster than traditional learning systems can renew them. Learning systems built for 18-month cycles cannot meet requirements that evolve in 18 weeks. The result is a talent debt or unrealized potential that accumulates when human and machine capabilities fail to evolve together. Machines are learning faster than humans who have to work alongside them, and the gap in pace of learnings between machine and people implies tensions similar to what you get when you pair two individuals with vastly different understanding of the issues. This implies rethinking traditional approaches to learning and building a co-learning machine-human enterprise. The next wave of successful organizations will be those that can see how their adaptive capability is growing as the real benchmark of competitive strength, not just sheer headcount or a static skill inventory. Roles are now being redesigned for humans and artificial intelligence to evolve together, each focused on respective strengths. The most impactful AI systems are simulated with intent to enhance human capability, not diminish or replace it. On migration, winners will see it as a competitive advantage, not a political flashpoint. Infrastructure such as visa processing, credential recognition, housing, and integration will determine whether countries turn demographic pressure into economic gain. Sub-Saharan Africa's working age population is set to rise from 883 million to 1.6 billion by 2050. even as global labor shortages deepen across several sectors: healthcare, manufacturing, construction, and technology. But the systems linking talent, supply, and demand are increasingly under strain. Countries such as the United States and to some extent South Africa and the UK have unfortunately politicized migration themes. Spain is an example of where they got it right. In 2023, immigration accounted for 64% of new jobs, half of economic growth, and a 3% rise in GDP, nearly 4 times the Eurozone average. The fifth factor is about the global resource rush. A new race is underway across 3 frontiers: deep earth and seabed mining, the Arctic, and even space. The space economy alone could reach $1 trillion by 2032. Meanwhile, demand for critical minerals like lithium and rare earths is rapidly outpacing supply, but with opportunity comes risk from environmental concerns and regulatory uncertainty. At the same time, a shift is emerging toward circular economies such as recycling, product life extension, asset as a service models, essentially doing more with less, with increasingly zero waste type operating models. In the future, trust will become the defining intangible asset. Breaches of trust will carry great consequences, and trust itself will be more essential to success. Can we trust the data? Can we trust companies to use it responsibly? Can we trust controls that are now taking over by artificial intelligence inbuilt into workflows? Can we trust outputs and decisions, understanding the bias that may have been built into them? Without trust, you weaken the value of data and limit ability to create value and drive adoption. AI cannot thrive where trust is weak, so leaders must intentionally adopt behaviors to build trust. Some mistrust can be healthy, but corrosive mistrust is dangerous. People often forgive competence failures more than integrity breaches. In the new era, leaders must build trust deliberately and lead with transparency. Capitalism is about efficiently allocating capital towards activities that are deemed to offer the highest short-term financial returns. In today's less stable and volatile environment, that presents unique challenges. Also, we see AI accelerating a winner-take-most dynamic, as 7 large artificial intelligence-oriented tech firms make up 33% of S&P 500 market capitalization, and 0.001% of humanity own 3 times more wealth than the bottom 50%. This calls for a better balance, and governments should invest for the long term in people, infrastructure, and the economy while providing legitimacy, appropriate regulatory guardrails, and ensuring trust rather than heavy-handed intervention. Investors should spread capital much more broadly than is presently the case, prioritizing diversification, resilience, and long-term returns. Companies should broaden their mandate to create value for all stakeholders. There can be a better balance that is more sustainable. So, what does this all mean for leaders? Starting with revisiting some fundamentals and having the right data foundations, everybody can find his or her own beginning point. It could mean releasing old assumptions, planning for multiple scenarios, building flexibility into every decision, and investing in people, not just technology. Above all, building organizations that can adapt continuously, because in a world of nonlinear change, the winners won't just respond to the future, they will be reshaping it. Well, that's it on this special episode of Global Business Insights. We are now on Spotify, Apple Podcasts, and wherever you get your podcasts from. We're on most popular platforms. So do please support us. This is Bode Oshosami. Thanks for watching, and please follow and hit the notification button. Bye-bye.